So everyone, hope everyone can see my screen now. Hello? Hello? Can everyone see my screen now? Good. Okay, okay. Okay, so I'm recording on Zoom at the same time I'm using Google Meet for the meeting. Okay. So now, first of all, um, so since you can see my screen, I'm gonna start with the strategy. So everyone is familiar with sessions here. Sessions in the markets, Forex market sessions. So we have the three major types, which are the Asian, um, NY, and London, okay? So Asia, Asian, London, then New York. Okay. So now, since everyone understands this, and everyone knows the timing, so I'm just gonna go through in the strategy. So strategy is a session-based type. So we're looking at price action based on how they react to each sessions, mainly the Asian and London. So sometimes we have New York opportunities too, but it's rare. So mainly the Asian and London. So Asian session, we're not taking any trade at Asian session. We want to see how price reacts outside Asian session, okay? So that's the reason why. Like that's the way the strategy works. So first of all, so looking at the strategy, is a London or NY session based strategy for entry, okay? So we have three entry models basically. So we have the entry models, we have the simple or normal entry, okay? Then we have the advanced entry and reversal entry. Okay, so I'm gonna explain how the three entries work and simply how to trade it. Okay, so I'm gonna start with simple entry. So now for the strategy, I'm gonna give you a few software type of indicators that helps us, predict the trend. Uh, then also mark the various sessions. Okay, so first of all, we have the software like giving us Asian session box. Okay, so this box based on the strategy, denotes Asian session range. Okay, so there's Asian high, Asian low. So first of all, before I go into this, so the most important thing is about prediction of trend. Okay, predicting trend. So now, prediction of trend is very simple. So predicting trend is actually like this. So if yesterday was bullish, today bullish. If yesterday was bearish, today bearish. Okay, so that's how it is. That's how simple predict trend for the strategy. It's very very simple. Okay, I'm going to explain to you in detail. So now I'm going to show you example of the simple entry. So these are the simple entry works. So in a scenario whereby uh price has the Asian movement like this, so we'd always see the Asian box this way. So after we see the Asian box this way, something like this, okay? So now, let me give a buying scenario. So for a buying scenario for this, we expect price to take out the Asian low. We expect price to take out the Asian low. So expecting price to actually take out the Asian low, okay? So price, you want to say that price takes out this Asian low level. Do you understand? So after price takes out the Asian low, we're not expecting price to create a reversal like this. So now, the only indicator we use for this strategy is MACD, which is MACD. So MACD is only for confirmation. We don't take the trade based on MACD, but after we have our price action, okay, whether the simple entry, normal entry, simple or normal, advanced or reversal entry. So wait for price action there first, then we're expecting a MACD confirmation. So we're expecting MACD to give us a green bar on the histogram, on the MACD. Okay, so after we have a green bar on the MACD histogram, then we buy with a fixed SL of 30 pips. So this is where the buy is taken from. So the buy, after there's a reversal, shortly after price takes out the Asian low. Okay, so expecting a buy with a fixed SL of 30 pips. So 30 pips fixed SL. Okay, so we're expecting price to do what? To buy. So expecting price to move to the upside like this. So now this works given the fact that yesterday was bullish. So if yesterday was a bullish day and today started like this, so we're expecting a simple entry like this. So price shall actually give a reversal, then MACD confirms it. So I'm going to teach you everything on charts. I just want to give you illustration on how it works, okay? So we're buying with a fixed SL of 30 pips for currency pairs. So 30 pips fixed XL is actually currency pairs, okay? So it is fixed. So from your entry, we are counting 30 pips away. So it's a fixed 30 pips SL. Then we're expecting price to move to the upside, okay? So that's how it is for a buy. So now for a sell scenario, so now, like I said, prediction of the trend, if yesterday is bullish or was bullish, today is bullish. If today, if tomorrow, or if yesterday was bearish, today is gonna be what? Bearish. So now, for a sell opportunity, so let's imagine this day was actually a bearish day like this. So if this day was a bearish day, okay, the next thing we're expecting, so let's imagine this is the Asian box. This is the Asian box, okay? So now, as usual, the Asian box and it's stacking. So something like this. So after the Asian box does something like this, so we're expecting price to take out the Asian eye, okay, for a selling opportunity. So we're expecting price to take out the Asian eye, given the fact that yesterday was bearish. So this was yesterday's trend. So now we're expecting price to like this, take out the Asian eye. So after price takes out the Asian eye, so that's the very first step for the simple or normal buy entry. So price takes out the Asian eye. So after price takes out the Asian eye, what next? We're expecting a reversal like this. And MACD giving us an entry. So MACD must give us an entry on the red histogram. So the red histogram must show. So that red histogram reveals a new trend is about to start. So the confirmation is on the red histogram. So after the red histogram is actually shown, then we can take a fixed sell entry with a fixed SL of how many pips? Of 30 pips. 30 pips SL. Okay. So I'm not expecting price to sell to the downside. Like this, like sell to the downside. So do you understand so far, guys? Hello? Okay, that's good. So let me get back to this. So that's just the basics of so this is just simple entry. This is just simple entry, okay? This is simple entry. So now let me take for advanced entry. So for advanced entry, it is very simple as well. So now mind you guys, simple and advanced entry, these two, simple entry and advanced entry, works significantly with trend. Only reversal entry doesn't require yesterday being bullish or today being bearish, but there is a condition to that, okay? So now, simple entry and reversal entry requires MACD. Advanced entry doesn't require MACD for entry. Do you get? So the simple or normal entry requires MACD for confirmation. Reversal entry requires MACD for confirmation. And advanced entry doesn't require MACD. Okay? So that's how it is. So now for advanced entry, uh, let me take you advanced entry. So for advanced entry, okay, so now for advanced entry, now there's just a slight difference in simple and advanced entry, but the similarity is that we still use yesterday's trend to predict today's trend, okay? So now for advanced entry, it is very simple. Now, so given yesterday was bullish, so this is a bullish scenario. So yesterday was actually bullish, okay? Then this is the beginning of today. So let's use this as a previous separator. Now, this is our Asian box as usual. So this is our Asian box. So in the Asian box, we have something like, okay, so we now have something like this. So this is the middle of Asian box. Okay, so now, uh, so we now have a reversal in the middle of the box. Okay, so first of all, you have to be very observant on this. Okay, so now yesterday, first of all, the very first reason is because yesterday bullish. Yesterday bullish. Okay, so yesterday was bullish. So now price reacts in the middle of Asian box. So this is the Asian box. This is the middle of the Asian box. Okay. So price reacts in the middle like this then. So I'm gonna buy on the next bullish candle. So if we're looking for a bearish candle to take price into the middle of the Asian box, so on the next bullish candle, it doesn't have to be bigger. It could be this small. Could even be on the same level with the candle. So a bearish candle, or it could even be two or three bearish candles. So on the next bullish candle that takes, that rejects from the middle of the Asian box. So this is 50% of the Asian box, okay? So expecting price to react in the middle, unlike the simple entry whereby price will react by breaking the low of Asia, okay? But in this scenario, price is only reacting in the middle of the Asian box. So we don't need MACD confirmation. So once we see a buy, okay, a buying candle in the middle of the Asian box, so we're gonna buy. We're buying with a fixed 30 pips SL. a fixed 30 pip SL. So we're buying on this candle and expecting price to move to the upside, to continue the uptrend. So this is the advanced entry in the middle of the Asian box, okay? That's how it is. So now, advanced entry for a share for a sell opportunity or a sell scenario, okay? So we expect price to do something like this. So let's imagine yesterday was bearish. Yesterday was bearish, okay? Then so after we have this as yesterday being bearish, so let's imagine we now have our Asian box around somewhere around here. Okay. So after having this, then the usual, so we're expecting price to react in the middle of or 50% of the level, okay? In the middle, okay? So we're expecting a candle to take price to the middle of the Asian box. And sometimes it might take, 2 or 3 candles or more. Then we're expecting to do what? To sell on the next candle. So I'm going to take a sell from here on the next candle. If it was a bullish candle that took price here, the next closing bearish candle is going to be where our sell will be taken from. Okay, so we're going to take a sell here with a fixed SL of how many pips? Of 30 pips. So 30 pips SL is actually fixed. Okay, so something like this. So expecting the downtrend to continue. So yesterday was bearish, today bearish. Yesterday was bullish, today bullish. Okay, so that's how it is. So do you understand this so far? Exactly. So for the time frame, it is a fixed 15 minutes time frame. Okay, 15 minutes always. So now you might be wondering why we don't use large time frames, H4, H. The trend is only predicted by yesterday's trend. Okay, so let me give you the logic behind the trend. So we have high highs and lows in the markets. Okay, so now it is very simple. So to make things simpler and to avoid complications, so now let me give you the logic behind the trend. So for the trend, now this is it for the trend. So we know that markets has something like this. Market always have this kind of movements whereby you have this, then this, you know. So you have high highs and lows in the markets that will still last a while before price, then comes to change the trend. Okay, so we're working based on higher highs and lows. So we know that even on the H4, for the higher highs and higher lows, so let's imagine this could be maybe day one, day two. So most occasions, this is day one, day two, then day three. Then maybe from day four, maybe trend could change from day four. So by the time trend will change, it probably will give a reversal setup, a no setup, or maybe price just gave the good setup then at New York, or maybe at the end of the day, price now changed trend. So if today now ended bearish, then we expect lower highs and lower lows. So we expect the bearish trend to change for at least maybe 2 to 3 days. So that's why we use yesterday's prediction for today's prediction. So maybe for the next 2 days or 3 days, and sometimes it might last up to a week. So this is it. So let me show you what I'm showing, what I'm trying to do on charts briefly. So let me show you something like that on chart briefly. Okay, now, so this is 15 minutes time frame. So let's go to H4 or H1. So now this is what I'm trying to say. So we're expecting so this is more like higher highs and lows, lower highs and lows. So let me remove all drawings. Okay, so now first of all, we see that price was bullish for how many days straight? 1, 2, 3, 4. Then the trend started to change from this day. So bearishness started for 2 days. Then trend changed from year one, day 1, 2, 3, 4. Then there was a slight change in trend here. Then the bullish trend continued again. 1, 2, 3. So that's what I hope you understand what I'm saying. So this is our major trend. So we focus based on the previous day's trend because based on our directional bias, once you analyze the trend, that trend should actually last for at least 2 to 3 days, you know, or even if it's a day sometimes. But most times, so this one lasted day one, day two, day three. Okay. Then this trend lasted. Sometimes the trend might last up to a week. So this trend lasted day one, day two, day three, day four, day five. While there was, this looks more like a ranging market, but we know how to handle it as well. So now we look at this. So from here we have 1, 2. Then from here we have a bearish trend 1, 2. So this is how we predict. So if this day was bullish, we expect this day to be bullish. Okay, this day bearish, expect this day to be bearish. So that's like our overall bias, and our bias is not really a risky type, as well as something whereby will actually be trying to like seek airtime frames or too much constraints. Okay, so it is as simple as ABC. So yesterday's trend is predicting today's trend. Like this scenario too, this day was a bearish day, so this day was also a bearish day. Then this day started bearish, so one could have made some profit on this little bearish trend before the trend changed. So it changed to a bullish trend, then the bullishness continued on the following day. So that's how it is. Then we see a bullish day here, bullish, bullish. So this is the logic behind yesterday bullish, today bullish. So we would have known when the trend is about to change. So if today was bearish, then tomorrow bearish for a while before the trend changes. Okay, so we're capitalizing on the current trend, and it's always updated that way. Bearish, bearish, bullish, 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 bullish. Okay, so that's how it is. So let me go back to this. So are you clear on both the reversal, sorry, the advanced entry and the uh both the advanced and the simple entry? Is everyone clear on that? You said what? No, 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 don't worry. I'm still gonna brief you on that, okay? I'm just trying to teach you what the setup is. I'm still gonna go on charts, okay? So now, so the last but not the least, so this is reversal entry. Okay, so now unlike advanced and simple entry whereby you need the trend. So simple entry, remember guys, a buy is gonna take out the Asian low. First of all, yesterday must be bullish. So a buy must take out the Asian low with a reversal, then a MACD confirmation, then we buy with steady pips, fixed SL. Then for the bearish, price must take out the Asian eye for simple entry. Price must take out the Asian eye. After price takes out the Asian eye, a reversal, then a MACD signal, then we're expecting price to drop to the downside, okay? Then for advanced, price must react in the middle of the Asian box, okay? Given the fact that yesterday was bullish. So today we're expecting a bullish entry for price reacting in the Asian middle, the middle of the Asian box. And same thing for this, yesterday bearish, price reacting in the middle of the Asian box. So we're going to buy on the next red candle, or you're going to buy on the next blue candle, okay? So that's how it is. So now for the reversal entry. So now in this case, we can trade in line with the trend or against the trend, but most times it's going to be against the trend. So now let's imagine we have yesterday. So let me give you a bullish scenario. So let's imagine we have yesterday to be what? To be bearish. You have yesterday to be bearish. Then, so after having yesterday being bearish, what next? So we're gonna be looking for, ordinarily we're gonna be looking for a bearish setup, okay? So first of all, in this case, we always mark yesterday's high and yesterday's low. So now let's mark yesterday's high and low. So this is, oh, so this was yesterday's high. Yesterday's high, yesterday's low. Okay, so this is yesterday's low. So now in this case, based on what I taught you, you'll be thinking, oh, must look for a simple or an advanced entry, okay? So that you can actually take a trade in continuation of the trend. So now reversal entry is a simple way price trade changes trend. So that's what we observe on charts. First of all, we're gonna mark our Asian box. So this was yesterday, so this is today. So let's imagine this was today. So after we mark our Asian box, yesterday was bearish. So first thing, you see the usual Asian movements. So first of all, now we'll be expecting price to take out the Asian eye so that we can actually sell after MACD gives a confirmation. Or maybe price to come up like this, then react in the middle of the Asian box, then give us a buy signal, then we buy to the upside. But unfortunately, price doesn't do this, okay? And price comes down as if it's a buy setup. So now, if price reacts at the previous day's low for a buy entry, okay, for a reversal, if price reverses at the previous day's low, and MACD gives us a confirmation down here, it is what? It is a buy. Then we're buying to the upside. Do you understand? So now, this is it. You mark the previous day's high and low. Okay. So now, price doesn't have to come down to this level of the of the previous day's so this is PDL, previous day's low. Then this is PDH, previous day's high. So now price doesn't necessarily need to come here. Price may actually just, uh just let me get my razor. Price may just test from here, maybe like a few pips away, then react like this to the upside. It's still rejecting from the previous day's low. So price doesn't necessarily need to come down all the way down to this level before it can go up. So once price actually rejects from this kind of level, from this kind of area, and MACD gives a green histogram entry, you can actually buy from here. They fix 30 pips SL. So the SL must be fixed at 30 pips for currencies, okay? So for gold, you're looking at 40 pips, or maybe maximum of 50 pips for gold, because gold can be very much volatile than currencies. But for currencies, fixed 30 pip SL. So we're gonna buy based on price reacting on the previous day's low. So now let me give you ways of reaction or rejection or change of trend. So price will always change trend this way. Price always change the trend like this. Either this way. Yeah. Oh. Okay, guys. So I'm sorry. So price always react this way, like change trend either this way. So from higher low, higher high, from a uptrend now to a downtrend. Price always change trend this way, okay, or this way, giving us a double top or an M pattern. So this is how it is. So now, if price changes trend this way, this is likely to be what? So this is the previous day's high, okay? So from the previous day's high, we're expecting price to do what? To buy, to still continue the buy. But unfortunately, price gave a sell setup. So if price is reacting from the previous day's high, so that is a prediction that price is about to start a downtrend. Or this way. So most people see this as a Cosimodo reversal. So if price react this way, okay, that means maybe price, so price is likely going to do like this. So this is the previous day's high, but price will not react exactly like the previous day's high, but maybe close to it like this. Then once we see histogram sell, then we cannot sell and expect price to go to the downside. So that's the scenario in this case. So in this case, price is doing more like an inverse M or maybe a QMR, maybe something like this. So this is how price decides to reject on this day and change, then start a new trend to the downside. Because no trend lasts always. Trend can change at any time, okay? So this is a reversal entry. So you'd have capitalized on the new trend. So after you capitalize on the new trend, what else? After this, then if today now ends up to be a buy, they're expecting tomorrow to be a buy again, and the new trend continues that way, giving you an advanced or a simple or normal entry. So that's how it is, guys. So now, to the next one. So for reversal sell entry, so let's imagine today was a buy. So let's imagine today was a buy. So now, given the fact that I taught you that if yesterday was a buy, you're gonna buy, then you now have in mind that, oh, once price gives me a buy opportunity, I'm gonna buy. So now this is Asian books. So we're expecting price from the Asian books to come and, you know, something like this. So take out Asian low, Then after MACD gives you a histogram buy down here, then you're not gonna buy with a fixed XL of 30 pips, giving you a simple entry, or on the other side, gives you a reversal entry at the middle of the zone. Then from there, you have something like this to the upside. Okay. So now in this area, or for this, so we're expecting price to do something like this. So now price didn't give us either of the two setups, whether simple or normal entry or the advanced entry. So then price now reacts from the previous day's what? From the previous day's high. So we see the previous day's high here. Then boom, price reacts from the previous day's high. It could even be 30 pips away, it could be 5 pips away, it could be, 10 pips away, or it could even be exactly or slightly above the previous day's high. So after price does this, reacting from previous day's high, we're not expecting price to reverse, then a MACD confirmation. Then we're not expecting a sharp downtrend. The downside. So that's the difference between simple. So now let me recap again. So this is simple entry, taking down Asian low, then price reversing. They're expecting a MACD confirmation. Given the fact that yesterday was, bullish. This day, yesterday was bearish. So today we're expecting a break of the Asian eye. Okay. Then price reversing with MACD confirmation. Then a downtrend continues. Then this in the middle of the box, price reversing 50%, then to the upside. And for this, opposite price reversing 50% in the middle and to the downside. Then for this, price not going in line with yesterday's trend. So yesterday was bearish. So this is an example of where price changes trends. So even if price was bullish all through, price can change trend by touching the previous day's low or high. So after price reacting from previous day's low or high, even if it's from here, even if price touches it or slightly below it, it is still perfect. Then same thing for these two. So does everybody understand everything so far? Hello? Okay. Yeah. Immediately after price breaks out from a session, you should be looking forward to take your trades. Okay. Okay, sure. You can actually take your trades if price breaks out during New York as well, okay? Because price will like most times, about 80% to 90% of the times, price will always give you setup during London. But you can also take New York opportunities too. That's if London consolidated. Sometimes London might decide to consolidate and it won't really give you what we want. But most times, 80 to 90% of the times, London will always start the trend. Then London will likely break out this low or react in the middle or reverse, trying to test the previous day's low or high. Okay? So that's how it is then. You said what? During London, okay? During London. Yeah. Okay, do you know what? I'm going to share my charts in a bit, okay? So I'll show you how it is done, okay? So now, not necessarily for you to wait for London. Anytime, as far as price breaks out of the Asian box, okay? I'm going to show you everything, okay? It depends on your time zone, okay? So now let me give you, so everybody here uses TradingView, isn't it? So let me give you a chart example. So now, first of all, the major thing you're gonna do, gonna choose your London time zone, okay? So time zone, I would recommend you choose London time zone. Do you get time zone, London? I hope you see that. Time zone is actually London. So this time zone is London, okay? Hello? So now, for the strategy, the strategy is very simple and everything has been made so much, easy, the strategy, okay? So now let me give you how it works. So first of all, we have software and indicator on this, and it's trading view based, okay? So I'm gonna clear everything on my charts. So my chart is as clean as possible, okay? So now for the indicators, so this is how it is. So basically, you look at you search. So now you look for FXN indicator by Billy FX, okay? FXN indicator, Asian session, previous day separators, by Billy FX. So I've added it to my own favorite. So you can add it to your favorite. So you add it to your charts, okay? So that's one. So two, the second indicator you're going to add to your charts is MACD or MACD. So MACD, moving average convergence divergence, MACD, moving average convergence divergence. So I've added it to my, so if you put the star in front of it, you have actually made it to be your favorite. So MACD. So MACD is going to show down below. Do you understand? So now, after you've actually added your both indicators, so you're only going to take trades after price. So now the indicator is very simple. It marks your Asian for you. So this is your Asian box here. Do you understand? So after you mark your Asian box, the indicator marks it for you, but you can also mark it by yourself. So after you mark your Asian box, so you observe when price is coming out from this box. So now on this day, using London Open, London session. So this is M15, okay? So this is where price came out from Asian. So anything from here, this is 6:15 a.m. London Open. So by 6 a.m. London Open, you should be active to see how price reacts from this level. So after price comes out from this level, from this Asian box, that's where we're looking forward to take our what? Our entry based on what price action does. Do you understand? So that's how it is, okay? Okay, now let me give you, I'm surely gonna give you examples of the strategy, okay? So now, based on the three I learned so far, is there any of them you don't still understand before I do my chat works? Hello? Is there anything you don't understand before I do my chat works? Okay, I can hear you, bro. No, no. Okay, you need to wait for price action, okay? Now, what do I mean by price action? So now let's imagine this is your Asian. So this is our Asian. This is our Asian box, okay? So after Asian box opens like this, so this is Asian movement. Do you understand? So now, so let's imagine price comes out of Asian like this. You're not taking any entry yet. Do you understand me? So the only time you take entry is if, so let's imagine yesterday was bearish, okay? Then price takes out this I. Do you get me? The Asian I. After price takes out the Asian I, then does like this. Then there is actually a MACD confirmation from down here, from down below. We are going to take an entry on the candle that closes. So you're going to take an entry, a sell position, okay, based on what price did. So you're going to take a short position, okay, then you're expecting price to continue the downtrend. So this is for simple entry. Now for advanced entry, so let's imagine yesterday was bearish like this. Then this is also the Asian session. So price comes out like this. So you're expecting price to close, to open in the middle, like, and close. Now, for instance, now we're expecting price to enter the middle of, so this is 50% of it, okay? Enter with a bullish candle. Then the next bearish candle that closes in this scenario, we're going to buy without even MACD confirmation. But trust me, most times MACD will confirm, but we don't need. So we're going to buy from the middle, from here, with a fixed SL of 30 pips. Then we're expecting price to go and continue the downtrend. Sorry. Do you understand now? So it's either, so if you're trading with the trend, it's either price breaks the Asian I or reverses from the middle of the Asian box. I hope you get me now. Do you understand me now? You said what? Yeah, this is so now. Let me give you a scenario. Are you with me now? Now, first of all, let's analyze what happened on this day, okay? Now, this is XAUSD, gold on the 15 minutes time frame. So first of all, we see that yesterday was what? Was this day a bullish or a bearish day? Bearish, good. This was the open, this was the close. So now, after we see this, this was a bearish day, okay? So we now mark the Asian box. It's always important to mark in our own way so that we can actually see it clearly, because this doesn't look so clear, but you can actually change the background, you can change everything, okay? So now, this is the supply, this is the Asian box. So now, what do we observe? We observe that price was coming out of the Asian box to take out Asian I. So this is Asian I. So we can see that price, price actually clearly swept the Asian I. So now, number one, yesterday was bearish. That's our trend, which is nice, okay? Now, today, scenario one, price swept towards the Asian I. Scenario two, once that price reacts and gives us an entry at the confirmation of MACD. So now this is a MACD sell signal from here. So anytime you see this red histogram, it looks like a candle. So this histogram on MACD reveals a selling opportunity. This green one, anytime the green one starts, it reveals a buying opportunity. So our confirmation is on this MACD sell signal. I hope you see that. So now, from the close of this candle, we sell rather. We sell from the close of this very candle. So all conditions were met. Number one, market was bullish yesterday. Number two, price broke out the Asian I. And number three, a reversal happened. This is a reversal. Something like this is a reversal or rejection. And lastly, what happened? Price gave a MACD confirmation. So MECD confirmation at here. Okay. So now we now put a fixed SL of how many pips? So for gold, you should look anything at 40 pips and above. So 40 to 45 pips, or at max 50 pips, depending on how your spread is. Okay? So we use 40 pips on this. So our entry was taken from here. Do you understand? And see what happened. This was a nice downtrend. So let's see how many pips would have made on this day. So if you held to the bottom here, towards the end of the day, so this is how many pips? 300 pips. Okay? You said what? No, I'm going to show you that. Okay, I'm going to teach you for TP and everything, okay? So now, I hope you understand so far. Do you get me now? Hello? So now, this is an example of what setup. What setup is this, guys? What setup is this one I just showed you? This was a normal, a simple entry, okay? Do you get, guys? So this was actually a simple entry on this day, okay? Okay? So now, this was a simple entry on this day, and it was a nice entry. So this is an example of a clean, simple setup. So price must come out of Asian box, breaking out the Asian eye. Okay, we see price breaking out the Asian eye, then a reversal, then a MACD confirmation, then we enter from here. So we enter the close of the MACD confirmation, then we sell. After we sell, then we're expecting to make downtrend continue. Okay. So now let me backtest this day for you. Okay. So now if you look at this day was a bullish or a bearish day. Good, a bullish day. So now this day was a bullish day. Now if you look at this day, first of all, we see that price actually did what? Price closed around here, okay? So the price closed here. So when price closed, so it's always important to mark yesterday's high. So this was yesterday's high. Yesterday's high. Then yesterday's low was at the open. Yesterday's high and yesterday's low. So now, first of all, we observed that price was coming out of the Asian box. So because this was a bullish opportunity, we expected price to either break the Asian low to give us a simple buy setup, or come out of the Asian box, come and react. Okay? And change direction this way to give us an advanced setup. Okay, but unfortunately, price didn't do this. So now price did what? Price reacted from the previous day's high. I hope you see that. So now, this was when price came out of the Asian books. So price now gave a selling setup. So price now created like an M structure for reversal. So if you look at this on the higher time frame, this looks like an M structure. So when you see such a structure, price is about to change trend, okay? So now, when you see such a structure or such an entry or an opportunity, please and please do not hesitate to take it. So this was yesterday's high. So price now reacted from yesterday's high by breaking it just a little, but price still reacted from it. So after price reacted from yesterday's high, so we'll now look for a MACD confirmation after price reacted from yesterday's high. So where the MACD give us a confirmation? On this candle. So our entry was taken from this very candle from here. Okay, because price reacted from yesterday's high. So price now always be clean with the reaction, trust me. But then this one is an example of a very nice setup too. So this was yesterday's high, and yesterday was bullish. Then we expected the bullish trend to continue. So this was Asian books. This was Asian books. Then this was yesterday's high. Then price now reacted from here. Then we expect a MACD confirmation. Then we expect a new downtrend to start. Simple. So this is an example of this surprise reacted at the previous day's high. So assuming the previous day's high wasn't around here, maybe there was no previous day's high, we will not take this setup because there is no previous day's high to actually make reference to the price reacted from the previous day's high. So our entry was taken from where? From where? So this is where MACD gave us a red signal. Do you understand? So this is where MACD gave us a red signal. So our entry will be taken from here exactly, then a fixed SL of how many pips? So this is 40 pips. Then price actually came to the downside and continued. And so this day would have made like 150 pips. So yesterday, yes, this day was reversal. This day was a simple setup. So this day started a new downtrend. Okay. This day started a new downtrend. Then the following day also did what? Also continued the new downtrend. So I hope you understand, guys, so far.
Yes.
So now, let me give you another scenario. So this day was what? This day was a bullish day, isn't it? This day was a bullish day, okay? So now,
Yes.
so now this day was a bullish day. So we're expecting a bullish setup to form on this new day, okay? So first of all, we'll mark our Asian box. So this is our Asian box. So we now see that price actually, you know, took out the Asian low. Didn't price take out the Asian low? Price took out the Asian low. Okay. So after price did that, what happened? So now we're looking for a MACD confirmation. So where the MACD gave us a signal? MACD gave us a signal somewhere around here. So this was the buying signal. The buying signal occurred here. So we're gonna buy with a fixed SL of 40 pips. So price didn't really give much, but price on this day yielded about if we held to the other day, see how far price went. So price gave well over 200 pips on this very trade without eating our SL. And the entry was just a simple entry. So let me recap the requirements again, or let me see the reasons. Yesterday was bullish. Today, price broke out the Asian low. So after price takes out the Asian low, the next thing to look for is actually a confirmation. Wow, price even give an entry here. So because we see a bull a bullish candle. But then this one is like the best entry would have taken. So price actually gave an entry on this candle. Then we buy. I hope you see that, guys. So that's how it is. So now let me look for another scenario for you. So now let's look at this day. This day was a bearish day, okay? It was a bearish day. So after we see this day as a bearish day, so the very first thing we do is to mark. So we mark, okay, sorry, this day was a bearish. I want to analyze this day for you. So this was a bearish day, okay? Yesterday was bearish, bearish too. So now, first of all, we see that this is, so this is the Asian box. So now we're looking for a bearish setup, okay? But first of all, we see that price was reacting from the previous, so this was the previous day's low, okay? Previous day's low. Price was reacting. But then sometimes price will always react from previous day's low and will still go the same direction. Do you understand? But now we see that price was reacting from the previous day's low. Okay, everybody can see this here. Hello, guys. Okay, I just wanted attention so I will know everybody's following. So now we see that price reacted from the previous day's what? Previous day's low. But the MACD gave us a green histogram entry. No. So MACD didn't give us that. So I think we just went there to buy based on candle closure. It's high risk. So we would have bought, then price change direction for us. Check it. But price didn't, MACD didn't give us a buy entry. Okay. So now, when I look closely, we see that price didn't honor this level, but price now made an entry in the middle of the Asian box. So now, first of all, this candle came to test the middle of the Asian box. Yesterday's trend was bearish. Okay. So price tested the middle of the Asian box. Price tested the middle of the what? The Asian box. So after we said that price tested the middle of the Asian box, so price entered the middle of the Asian box, the bullish candle, and closed the bearish candle. So our entry will be taken from this sell, this bearish candle here. Even if we used an SL of 30 pips, our SL didn't eat still. So how many pips was bagged on this day? We made 135 pips. All right, guys. So I hope you understand this. So, guys, I hope you understand everything so far. Hello? All right, man. So Now let me give you another. I want to give you so much more scenarios so that you'll be able to get the whole logic. Okay. So now let's check some other back tests. So now first of all, you see that this day was actually, so this day was a bearish day. Okay. This day was a bearish day. So now if you look at it, so first of all, let's backtest this day. So this previous day was actually a bearish day. So let's see this day. So now this was the Asian eye, then markets price didn't take out the Asian eye, then price didn't react in the middle for a bearish opportunity. So this day was a no trade. This day too was also a no trade because there was sometimes where price won't give us any setup at all. Okay. So now this day was actually what was a bearish day. Okay. So now, first of all, after we see this day as a bearish day, okay. So now we're expecting a bearish setup on this day. Okay. So now after we have a mindset that this day was going to be what? A bearish day. Do you understand, guys? So now, first of all, we mark our Asian books. Mark our Asian books. So price actually took out this Asian eye. Okay. Price took out the Asian eye. So after price took out the Asian eye, then what happened? We're expecting a MACD confirmation. So MACD entry was taken as around this candle. So this red signal on the MACD is actually our entry. So the MACD was taking, gave us an entry around here. So let's take our entry. So this was, so price gave how many pips on this day? So price gave 100 pips on this day. So that's how it is. So now let me give you some other scenarios. Sorry guys, so I'm back. Okay, so now so that's how it is. Looking at the entries and everything so far. So let me give you, I'm going to give you a few scenarios on currency pairs too. Okay. So now let's start this. Let's look at this. So number one, we look at this day. This day was actually a bearish day. Okay. So this day was a bullish day. I'm just gonna backtest, a few opportunities for you. So now this day, in this scenario, you might be confused. So you can actually predict the trend in two ways, basically. Okay. Number one, the open and the close of the day. So if the close of the day is higher than the if the close of the day is higher than the open, it's a bullish. Or the trend that ends the day. So this trend was a bullish trend. So this day is what? A bullish day. Okay. So now, first of all, on this day, we now see that price took out the Asian low. Our direction is bullish. Price took out the Asian low. So after price took out the Asian low, what happened? We're expecting a MACD entry confirmation, okay? So price took out the Asian low. So now let's see when MACD gave us a confirmation candle. It gave us around here. So now the Asian low. So we're gonna buy at the closure of this candle. So our entry was taken from here with a fixed SL of 400 pips. Sorry, 400 points, which is 40 pips, rather. So price gave us 775 pips. Okay, so 5 pips before it reversed. So I think price didn't reverse this way. Price touched our SL. We see that. After then, price then moved to the upside. Boom, to the upside. Okay. So now we look at this day. This is an example of an unclear reversal setup. So it takes expertise. You have to be, very good with the strategy to see this. So now this was the previous day's high. Somewhere around here was the previous day's high. Okay. So now, having to see that, the next thing to do is that you want to take an entry. So based on this, see that price was a bullish day on this day. I'm expecting a bullish setup. But unfortunately, price gave this kind of advanced setup, okay, on this day. So I'm gonna buy from here. After we bought, price didn't give any, pips, just about 20 pips. So this 20 pips, almost 30 pips, I'll count that as a loss for us. Okay, so this was a loss. But the opportunity could have been spotted from here because price reacted at the previous day's high. Not exactly, slightly above. Then we could have entered on the sell. Because price, so after even if you got stopped out here, you can actually take an entry on this candle based on price reacted at the previous day's high. Okay? Price doesn't have to react exactly. So if this was the previous day's high, somewhere around here, price can actually come up a little bit. Okay? Price could actually be on the same level or slightly below, or even below like this. It's still reacting to previous day's high. Price doesn't have to come to the level exactly. So this way, price is reacting at the previous day's high. It is quite risky, but then it is a good way to spot a reversal opportunity. And reversal tends to give more pips most times because it's the start of a new trend. So the trend can linger for a while compared to continuation setups. Continuation is low, is less riskier, can actually give, it's prone to give you just less pips. So after we lost, okay, we didn't lose on this yet. So this is like a good entry for us to have capitalized. So we lost 40 pips. And let's see how much you would have recovered. So if you're a trader that can actually take both positions like your agent, it's not bad, okay? You can take both. I do that sometimes. So we trade based on price rated on previous day's high, okay? Then this was when MACD gave us a sell entry. So from there, what do we do? So this is 390 pips. You said what? Okay, I'm going to show you today. So before I go to today, I hope you understand everything taught so far. Okay. So so this was today's opportunity on gold, okay? So now, first of all, looking at gold's entry. So yesterday significantly has a bullish trend because the bullish trend ended the day, okay? Even though the open and the close are on the same level, but this is a bullish for me, okay? Because the bullish made a significant high and low. Do you understand? So now looking at gold today. So um so we'll have this as a bullish. Okay. So first of all, having this as a bullish, gold gave on this day, sometimes you can actually have to take both positions, like two positions, okay? Because gold actually gave a loss and a profit, okay? So now, first of all, we see this was yesterday's high, and yesterday's low from here, okay? So now, you might find this technical sometimes. You might be like, oh, they're seeing a Bauzu setup. So whichever setup you take is actually okay, given the fact that price actually, gives you all the requirements. Do you understand? So first of all, we're expecting a buy setup, okay? But price took out the Asian high, okay? And price was reacting from the previous day's high. So now, after price reacting from the previous day's high, what happened? Price gave a reversal signal and a sell on MACD on this level. So now, so there was a sell from here. So the sell didn't really go well. It just gave about 20 plus pips. Okay. So this is a loss. I count this as a loss. But now, as we're looking at the sell, so there was some scenarios whereby gold will give you a buy and a sell at the same time. Now let's look at this. Price now gave an advanced setup. So trust me, guys, advanced setup doesn't have to be exactly on the middle. Advanced can come like this, like this, okay, or like this, or slightly below, or even this way. Price could come this down. This is testing the middle of Asia because everybody knows that there is nothing perfect on Forex. Okay, Forex is something very, very crazy. Like you can actually be seeing a setup in front of you. If you haven't trained your eyes to see it, it's gonna be difficult for you to find. So price actually took both. Price actually gave setup. So price came down with a bearish candle and tested the middle of this level. Okay, so that was the pip difference. The pip difference is about 10 pips difference. 10, I think 10, 14 pips difference from here, which is okay. So our entry would have been taken, so we don't need the MACD confirmation. Our entry would have been taken from here for so this was today's entry on gold. So initially, I didn't spot this entry. It was later I spot the entry. So today's trade on gold gave 443 pips. So this is an advanced buy setup. Okay, I'm with you. Okay, do you remember what I told you? I told you that only reversal and simple entry requires MACD. Do you understand? Advanced is in the middle of the zone, okay? So advanced, if you look at me so far, I've not been given, let me give you the advanced I actually taught you. I actually give it as an example. So all the advanced I've been given, none of them ever gives MACD. So you don't need MACD for advanced because if you use MACD for advanced setup, price might actually lag. So this is what's going to happen for advanced. So let's imagine this is an advanced setup. This is the middle of the zone, okay? Then price came into here. Then price is going like this. Price may actually give you an entry maybe after a year. Or maybe, so imagine you're taking your entry around this area. It is not fair. It is not okay. So you prefer you take your entry from here, where the next candle turns to the upside. Do you understand? So it is only simple, okay, or reversal. Only simple or reversal entries that actually requires a MACD confirmation. So that's how it is, bro. So any questions so far? You said what? Okay. So do you find the strategy easy and effective? Hello? Okay, so now let me give you a few examples, maybe on GU, on currency pair, because currency pair actually trading with a fixed SL of uh a fixed SL of 30 pips, like I said. So let me give you an example. So now this is GU, GBP USD. Okay. So now looking at GBP USD, the very first thing we do, so I'm going to backtest for a few days back. Okay. So now let me start. So I'm trying to start from a very significant place just to help everyone's confidence. Okay. Okay. Now, so let's just kick off from here. So first of all, so this was a bullish day. This day was a bullish day, isn't it? This was a bullish day. Okay. So now we see that on this day, price actually didn't give. This day was bearish. Okay. So price didn't give any sort of basic level. Price was reacting to this day's high. Sorry, this day's low. So if price reacting from the previous day's low, you don't really need any you don't need any break of Asian low or high. So price was reacting to the previous day's PDL. So after price reacting from previous day's low, then we see that price tested that area, then gave a buy. So a buy was taken exactly at this candle, somewhere around here. Then we made nice trades. I think how many pips? From here. So look at from here, from this closure. So this was 108 whooping. pips. Okay. So now let's try and backtest these 2 days too. So we look at um, from here. So guys, look at this day. So try and spot. Always mark the previous day's high. Please, guys, always mark the previous day's high. So this was previous day's high. Then we're expecting price to continue this bullish trend. Okay. So we now say that price, how many pips away? This was just 16, 15 pips away. So price was reacting to the previous day's high. Okay. And at the same time, it's also a reversal, sorry, an advanced sell setup. Okay, so we now buy based on MACD's signal. So we can actually buy from this area, sorry, sell rather. So we're gonna sell from here with a fixed SL of 30 pips. So how many pips do we make this day? 70 pips on this day. So this day was a what? A bearish day. Okay. So it's a bearish day. So expecting today to be what's bearish. So first of all, now guys, please be smart on this, okay? Don't be conned. This I is still inside the Asian. So we're expecting price to come out of the Asian to take out this level, okay? Like this. So the taking out of the level can even come up with a wick as far as it's significantly higher than this level, okay? No matter how small or wide it is still perfectly okay, okay? So now, after we see this, the next thing we're gonna mark the Asian books. Okay. So after marking the Asian books, we now see that price didn't take out the Asian eye. But price came to retest the middle of the Asian book. So price entered here with a bullish candle. So you must train your eyes to see the reversal. Okay. And price closed with this bearish candlestick. So now let's enter from here. We're going to enter a sell from here with a fixed SL of 30 pips. So we made 56 pips on this blessed day. So 2 days straight win. This day, 2 days straight win. Now, this day was bearish, wasn't it? It was bearish significantly. You can see that. So now, first of all, we observe that on this one, okay, so this is where an example where price gave 2 setups, which is perfect. So you can actually take both. You can take one if you wanna, okay? So we have a bearish trend. A bearish trend, okay? So after we see this our bearish trend, so the next thing we see that price came to test the middle of the Asian box. So this was the middle of the Asian box. Okay, so this is the middle of the Asian box. So price gave an entry in the middle. So price went significantly higher. Okay, so we could have sold here. This is the sell. Okay, so let's put 30 pip SL. So it's always good to relatively add like maybe 2 points or 20, like 2 pips extra due to spread, or sometimes price might just tap the level. So you can just add like 32 pips or something, which is fair enough. Okay, so we added this. Now, after that, price now gave another entry because price took out the Asian eye at this level. So price took out the Asian eye around here. So 2 entries. Here and here. So price gave 80 and say 80, 86 pips respectively on this day. Okay. So now we now see that price, this was yesterday's high. So price is reacting to yesterday's high from here before he gave us this buy. Okay. Because normally we could have taken this buy, this advanced buy. This is an advanced buy. But the reason why we didn't take the advanced buy is because advanced buy is only taken when yesterday was bullish. And I expecting an advanced buy bullish, but this was a reversal setup. So the setup gave us an entry exactly on this candle, then on this candle, because the histogram bars are great. So it's a nice one for us to ride the trend. So now, guys, this day was bullish. This day is also bullish. So now we now see that price took out the Asian low. So after price took out the Asian low, where did our entry start from? So our entry started somewhere around here. Price gave 84 pips on this day. Okay, our entry started from here. Sorry. Yeah. So this is it from the close of this candle. 84 pips on this day. So now, this is another example of um an unclear type of reversal. So this is like, it looks more like a QM type of reversal. So something like this, whereby this was an uptrend before, uptrend, then the downtrend changed and started from here. So if you're expecting price, this was the previous day's high. You're expecting price to touch here sometimes, trust me, you lose or miss entries, okay? So price could even be far. So let's check the difference from year to year. So price difference from year to year was relative 50 something pips. 50 something pips, okay? So now, after this, we now see that price reacted from here, this previous day's high. So we can actually use this previous day's high as a trend or as a, as a scenario. Do you understand? So price was reacting from the previous day's high, even if it's far from it, no matter how far it is, as far as it is not 100 pips. So anything from 50 pips below in the difference, it's okay. Okay, so price reacted from the previous day's high. So we can take this sell if price gives a MACD entry. So MACD entry was taken from here. Okay, so that's it, guys. So now on this day, let's now see what happened. So this day was like looking at a bearish day. So we can classify this as a bearish, okay? Because the bearishness of the from New York, even from London, the bearish trend started. The early part of the trend was a bullish of the day rather. Then this was where the trend ended. So this day we made 100 pips. Okay, so now look at here. Boom. Okay, so now first of all, we're expecting a bearish trend. Okay, but now see that price reacted from the previous. So this was the previous day's high. Sorry, previous day's low rather. So after price reacting from previous day's low, where the price gave an entry on the MACD, somewhere around here. So our entry was taken from here. So after we took our entry, what happened? We saw that price gave 25 pips, which is nice enough, almost 1:1, then reversed. So these are like worst scenarios. I'm being very realistic with the strategy because it's good of me too, so that you can actually understand how it works really well. Okay. So I'm giving you what will happen on a typical day. Okay. So this was where the entry was taken from. So because the reason why we would have taken this entry is because sometimes price could actually from there go, you know, to the upside. Because if price goes to the upside, you'll be regretting you didn't take the advanced buy entry from here because price reacted from the previous day's low. Okay. Now let's look at the other side. So this is the middle of the Asian box. Price gave a reversal, sorry, an advanced setup here. So for me, I will take both. Okay. So when I said that price gave this, so this is a double-edged sword for you because you can actually take both positions. And at the end of the day, you won't play. So sometimes you have up to like 3 positions in a day because price can actually react, give a few pips, then comes to the middle again, react, you know. But for me, I'll recommend just 2 position at max. So if you lose on both positions, just accept your loss and we start again for the next day. But trust me, hardly will you lose on 2 positions in a day. If one position happens to be a loss, the second one is going to be a profit for you. Okay, so take our entry from here and a fixed SL of 300 points, which is 30 pips. Then from here, so we didn't give much on this day. So our TP, let me say our target was the profit I made was just 68 pips. So guys, so this day was a bearish day. It was a bearish day. So now let's look at it closely. So price didn't give any setup on this day that was reasonable, but price actually gave an advanced buy setup. So now let's look at the previous day's low. So let's see the difference from here to this advanced buying setup. 40 pips difference. So now price gave an advanced buy setup here. Okay, then price was reacting to the previous day's low. So now if you look at it closely, based on the fact that it's an advanced ISO, so this is a high risk kind of setup, but most of us wouldn't want to take this. So for me, based on expertise, I actually have examples, or let me say experience, this kind of setups and they play out sometimes. Or another way you'd have taken an entry was in New York when price came down this way and gave an entry somewhere around here. But it is a high risk entry. So this day, I wouldn't, say we made any profits, okay, on this day because it's actually not something I would recommend for anyone, okay? But now let's look to this day. So this was the previous day's high at this level. So having the previous day's high, price reacted from previous day's high, even with an advanced setup. So this is like 2 setups together, reversal and an advanced setup, because it's more like the middle. So even if price entered from here, you could have sold here. So it was here price actually gave an entry. So we sell from this level. So on this day, how many pips did we bag? We just bagged 30 pips on this day. So that was how this day went because we didn't really enjoy the trend. This was more like a consolidated day, okay? Not really any trend. So now look at this day. This was because price reacted to previous days are just slightly a few pips above, which is okay. So now this was a bearish day, okay? So after this day, we mark this. So first of all, we observe that price took out the Asian eye. So after price took out the Asian eye, price gave an entry exactly on this candle. So we sell from here and just 34 pips. So there'll be some days where price didn't really give much pips as expected. 34 pips before reversal. Now, this day ended what? A bullish day because if you evaluate from the close of the previous day to this day, okay, to this close, it was like a bullish. Then a bullish trend ended the day. Looking at from year to year, okay. So now this looks more like an ugly M, okay, something like this, or let's call it double bottom, okay. So now this looks more like a new trend is about to start, okay. So now, what do we do? Look at this day. We're expecting bullishness on this very nice day, okay. So now look at this. So price is rejecting from 50% of the level, okay. So guys, this is the importance of trend. Sometimes price could actually break here, break out from this Asian eye. So after price break out from the Asian eye, you see an entry and price will enter from here, then react. Okay. So from there, we now be conned because price is about to um take the advanced setup. Okay, so our advanced buying setup was in the middle. So let's look at this place closely. So yesterday was a bullish day. So price actually came for the advanced setup. So now, how did it happen? Price entered. So for me, from experience, you can actually take an entry here or here, but this is not convincing enough. Okay, so as price entered from here, this was a nice place to have taken your entry. This candle. So no matter how small the candle is, a rejection is always a rejection. Okay, so this is it. Price entered from here. This is the 50. Let's see the level. This is the middle of the Asian box. So no matter how small the candle is, so if this entry wasn't convincing enough, price still went deeper, they would have entered from here. So either here or here, whichever way is okay. But I would have preferred here because price may not give you another entry at here sometimes. It's just close here, then move to the upside, and you feel like then you would have taken the entry because price won't give you another opportunity. Okay, so now so take our buy from here. So the fixed SL of how many pips? 30. So we realized 85 pips on this. Okay, 83 pips on this day. So this is like, some type of unclear setup for advanced entry because advanced entry might actually pierce deeper than, the exact middle of the Asian box. Do you understand? So that's how it is. So now let's look to this side. So this day was bullish. They expect a bullish day. Okay. So why we expect a bullish day? So what do we see from here? We see that price actually tested the middle, giving us an advanced entry. Now, guys, look at this is the reason why we don't want to trade. We don't want to trade against the trend. So the trend is bullish. Do you understand? So this is where the trend is important. So now let's look at it. So let's imagine price took out Asian eye and wanted to sell. So did MACD give us a signal? No. MACD didn't give a signal, even though there was reversal. Okay. So now after this, we now see that price came to test the middle of the Asian box and closed with a very nice bullish engulfing candle. So our entry would have been taken from here. So after we take our entry from here, what happened? Price moved to the upside and it closed above. So this is also a bullish day. Then today, coming to today. So okay, this is not today actually. So this day, a bullish day. So price actually gave an entry here in the middle. So price topped us out. But after price took out the Asian low, we see an advanced buy, sorry, a simple buy setup. So price took out the Asian low, then we took a simple buy from this level exactly. Then price paid us for the previous loss. So this was 458 pips. and we lost 30 pips here. So 158 pips minus 30 pips, that's a good number of I think that's 120 pips, 128 pips basically. Now look at this day, okay? So this was a bullish day actually. This was a bullish day. So now look at the overview generally. So looking at this as a bullish day. So first of all, price reacted to the middle of this Asian, okay? After price reacted to the middle of the Asian um box, so our entry would have been taken, our first entry would have been taken from here. Bearish candle, then bullish candle. So the bullish candle gave just barely 18 pips. Then now let's see whether it's hit our SL. Our SL was 30 pips. So price didn't hit our SL, but price changed trend. So on this trade, price just gave how many pips? Price gave um 37 pips. Now, if you look closely, price reacted to our previous day's high perfectly by New York. So this is another nice entry to take. Okay, so after price reacted to our previous day's high, so if you don't take New York trades, would have to you probably would have to, see how you can hold to the other day. Okay, so let's imagine we wanted to hold to the other day, or maybe ride the train or something. So New York entry was given around here at the close of this candle. So we could have taken it here because after London, so New York gave an entry. So we see this. So let's calculate our 30 PPSL. So if I had taken this trade to the next day, see how far it would have gone from New York. Okay, so that's how it is, basically. Now, this day ended a bearish day. Open, close. So this was another day, okay? So we now say that we're expecting a bearish trade on this day. So what happened? So the very first trade we took happened to be, guys, please, what setup is this? Hello? So what's that? God bless you. So this is an advanced setup. So here is convincing enough. So you can actually take this. It was a very fast uh reversal. And even if you're not convinced about this, you could have taken another entry here, another entry here. Okay. So this was my entry this day. Okay? 140 pips from here on this day. Now on this day, we see that price came and gave something like this in the middle of the zone. So first of all, we gave us this entry in the middle of the zone. This is an advanced, so the advanced setup field. So price took out Asian eye, then gave an entry here, around here. So this was the second entry. Then price gave us 46 pips, 47 basically. So we covered for the previous loss and we had about extra 10 pips. Now, on this day, this is today. Okay, so looking at today, so let's look at today closely. So price didn't give any setup today because this was the previous day's high, okay? Previous day's high. So having today, price only reacted and gave a normal simple sell setup. But then won't have taken it simply because we actually want to, you know, be safe about the trend, okay? So now, if you now look closely, you might be wondering, price didn't give an entry today. Price now came to test here and gave an entry in the middle, which is exactly at the middle. So price now made a consolidation, so you could have taken an entry on this bullish candle, or this bullish candle, or this bullish candle, okay? So let's imagine we're convinced enough by this or this. Let's say this, for instance. This is today. So 30 pip SL. Now, see how far price went on this day. So today, 63 pips. Advanced sell entry, 63 pips. Yeah, all of them, all of them. You see, the London Open, I think you're also going to learn London Open based on your package. So the London Open is very simple as well. I'm going to teach you maybe later this night or tomorrow, okay? So London Open is very simple, understand? But this is for currencies, indices, and anything at all that can be traded. But London Open for indices is actually for just indices, not currencies, okay? But I have a student that actually uses London Open for gold. London Open for indices, he uses it for gold and it works perfectly for him. He makes money every day and he rarely has losses per day. You say what? Yeah, same strategy. Well, there is okay. So now that's good. So first of all, now for TP, okay, you can actually target. So now for gold, your first target for TP should be 1:1. Okay, second target for TP should be 100 pips, and third target for TP should be 200 pips for gold. Okay, so to make it easier, your first target for gold can actually be 50 pips. So now, meaning that, let's imagine I'll just teach you how I, sometimes, manage my trades, okay? Now this is gold, for instance. So you have a sell, maybe a sell from here. So now, having your sell first, the very first thing you do, after you have your sell from here, so let's imagine price goes 1:1. No, let's say price goes 50 pips first, okay? So after price gives 50 pips, 40 pip SL, or let's say 35 pip SL, then price gets to 50 pips. So you can actually run two positions. So if your lot size was meant to be one, because I'll tell you that putting your SL at break even cannot be so reliable sometimes because price might touch your entry, then now go into much deep profits. Okay. So now, if your lot size is one lot, for instance, so you can actually divide it by maybe the first lot size. So you use 0.4, which is about 40% of your position, then 0.6, 60% of your position. Okay, so you can now close 0.4. The trade on 0.4 would actually be here, and the trade on 0.6 can be at 100 pips for good. So anything from 150 or 140 thereabouts. So you can actually now slash this into two. So you now close 0.3 of your position. You divide this into two. You can actually, if you want to take maybe tip 1, tip 2, tip 3, so you can do like this 0.4, 0.3, 0.3. Okay? So this is a very significant way to manage your trade. So you want to be sure that when price goes 50 pips first on gold, you're actually sure, okay, based on 50 pips price gave me on gold, I'm actually, so By the time gold gives you 50 pips, you want to be sure that your trade is risk-free. So by the time you close this, even if price go with the remaining positions to its SL, you know you are risk-free. Do you understand? Because if your first trade is 35 or 40 pips, okay, then price goes to its SL with this. So you're actually like on break even. But we don't want price to just touch our entry, then stop us out, because price can actually do this, then still go your direction. So you want to make sure that anything from 100 pips, 150 pips, you have all your trades closed. Do you understand? So that's how it is. So now, if you want to hold trades longer, just make sure that you're in the same trend. For instance, now let me give you a tip to hold trade longer. Because sometimes you can actually hold a trade longer than expected, okay? So now, if we're taking an entry from here, you can actually hold this very trade all the way up to this level because price didn't get back there. You can also hold this all the way up. I hope you see this trades from this entry all the way up for 321 pips. Then from this entry all the way up for okay, this three, okay. So we can actually hold these trades. So now let's imagine, for instance, now you buy from here, okay? So after you bought from here, you make sure to have closed significant positions. So make sure you're leaving 30 to 40% of your position for this. Then, secondly, your SL should be at entry, okay? And you don't want to hold trades for more than 3 days in a normal circumstance, okay? So now, after price, you now leave the remaining trade to see how the end of the day goes. Then you put your SL at entry. Okay, so now a signal for you to close this trade is if price maybe reacts from previous days high and give a sell setup. Now we see that price is not really reacting. Price has moved beyond this previous day's high with the number of pips. Okay, so see that price is not reacting. Then price now gave a setup. So after price gave this advanced setup inside here, this advanced setup, and you buy. Okay, so you now move your SL that was an entry to the SL of this trade. This SL of this trade to the SL of this very trade. Then your entry will now start. So this one is even secured in some profits. So you now see how this day goes. So at the end of this day, we're still on a bullish trend, okay? So you want to hold each and every trade until a bearish trend starts. So how do you know if a bearish trend starts? If price gives a reversal entry, like here. So now price gave reversal entry at this New York. So after price gives a reversal entry, you want to hold, you want to make sure that you close all these trades. Because price be like, so now see what price did. Price came down, but price still went to the upside. So now, from this day, from this reversal entry, you could have taken the trade here, then another trade on this day down. Okay, then after price gave, so now look at this. Price gave a sell opportunity, then price also gave a buy opportunity because price reacted at previous day's low at this area. You could have actually bought from here. So after price gave this opportunity, you close the previous trades because a bullish trend is about to start. So the bullish trend took out these SLs if you had the positions. Or if you let's start break even, prices have taken them out, and the bullish trend is now continued. So this bullish trend is going to close this day, and hopefully by Monday, we're going to get either a simple buy entry, an advanced buy entry, um, a reversal sell entry, whichever ways. So that's how it is, guys. So do you understand everything so far? I hope you understand everything so far. Okay, uh, so that's how it is, guys. That's how it is, basically. You don't have any questions, yeah? You said what? Yeah, this is the session that comprises of the strategy for currency pairs and gold. Okay, so this is London Open for strategy. Sorry, for currency pairs and gold. So you're still gonna learn the London Open strategy for indices. Okay, so that's gonna be maybe later this night or tomorrow. Okay, but for this one, are you perfect yet on this one? Do you understand everything so far on this one? Okay, so okay, okay. That means you would have to rest. So by tomorrow, I think anything from maybe from 8 a.m. GMT, I'll be able to take you, okay? So we'll meet by 8 a.m. GMT, okay? My time zone is GMT plus one. So you can actually, okay, since your time here is actually 1 a.m., yeah? That means anything from, okay, because this is 8 p.m., 8 p.m. in my time zone here. So let's, okay, no problem, no problem. Yeah, yeah. Thank you very much, man. Yeah, thank you. I appreciate you too, man. Yeah, thanks, bro. Yeah, man. Yeah, man. Sure, bro, I'm gonna do that. Yeah, man. Thank you.